Traders, stop guessing your entries if you are tired of fake outs. Today, we are going to learn exactly how to identify a valid order block the smart money way. No stuff, no confusion, just pure strategy. You have probably heard the terms order block thrown around in trading communities, but 90% of traders mark them wrong. And that is why they keep getting stopped out. So by the end of this video, you will know how to mark a valid high probability order block that institution respects. So guys, an order block, first of all, let's start by explaining what order block is. So, order block refers to a specific price area where large market participants, such as institutional traders, banks, etc., have previously placed significant buy or sell order. Simple. Now, for example, now look at this symbol, look at this illustration down here. This is a particular area whereby the institutional traders, the banks, the hedge funds, they place a significant buy or sell order in this particular area. Understand? This is the particular area whereby so many people now, for example, now price has been going up, down, ranging up and down. So at a particular point, institutional traders, the SMCs, banks and other people start placing different type of orders here, and in a system whereby so many orders is being placed in a particular place, it can cause a, let me say, a spike movement either to the upside or to the downside. That is the main reason why the spike is being caused. Understand? That's everything. So now order block, we have two types of order block. Okay, we're going to do a chart illustration very soon. We have two types of order block. We have a support order block and we have a bearish order block and a bullish order block. Yeah, bearish order block and a bullish order block. So now, from our bullish order block, so a bullish order block is the lowest candle with a down close candle, a sell candle. You understand? Now this is found near a support area. For example, you can see in my chart now. Price have been moving from one place to another in this particular area. Let me bring out something. Price have been ranging from up to down in this particular area. So this is a support area. This is a support area, guys. This is a support area. This area here is a support area. This is our support area. And what does a bullish order block say? A sell candle that is found near a support area. A bullish order block is the lowest candle with a down close candle, which is a sell candle. You understand? Now let's find our bullish order block. This is our sell candlestick here. This is our sell, and in fact it is near a support area. So this is our sell candlestick before dishing out this big engulfing candlestick that caused a break of structure, giving us a valid order block here. So this is our order block. This thing need to move. We have gotten our order block, a valid one, a valid order block. This is our order block here, because at this particular junction, both the institutional traders and the banks place a significant buy order in this particular area, a buy order which caused price to start spiking and pushing to the upside. As simple as that. Now let's check for, okay, now first of all, how to know a very valid order block. In terms of that, we have three good reasons for you to know a very valid order block. First of all, there must be a break of structure. The order block must cause a break of structure. Now this is the order block over here, and this, you can see here, this is our break of structure. This is our break of structure here. So that break of structure was caused by our order block. You understand? This break of structure was caused by our order block. So after the order block, we need, after the order block, after the break of structure, the second reason that, or the second confluence that will make our order block valid is imbalance of fair value gap. And you know what's fair value gap, guys? So this is our fair value gap over here. This is our fair value gap. A gap between three standing candlestick. This is our fair value gap from here to here, showing us that this particular zone, or this particular area is valid. This is our fair value gap, guys, and this is our order block. Understand? So this particular order block settings is valid. Now the last one, so the last one is unmitigated, which means price should not mitigate the order block. So this order block is yet to be mitigated by price. So therefore, this is a valid order block. Why? Because you can see a break of structure and a fair value gap, and this order block is yet to be mitigated. That is why it is a very valid bullish order block. Bearish order block. A bearish order block refers to highest candle with an up close candle. This is found near a resistance level and has been engulfed by a bearish candlestick. Now guys, example of a bearish order block. This is a typical example of a bearish order block. You can see it's something like this, guys. What do you see? This is a resistance area here. This is a resistance area. You can see it, guys. After numerous ups and downs of price in our resistance area, after price pushed to the upside, rejected that place, it pushed again and it rejected that particular place before this little move. This is the particular area whereby numerous or significant buys and sells has been placed in this particular area. So after this particular place, price did what? Ditched down to the downside, causing a break of structure in this particular area here. So this is the particular place whereby, let me say, yes, whereby the banks placed their sell order, and anytime the banks placed order, we follow the banks, we don't trade against them. So the banks and so many other companies place their sell order in this particular area, and this particular order caused this spike to the downside. As easy as that, it caused this spike to the downside. And for you to mark out our order block, this is the last bullish candlestick before this bearish candlestick formed and gave us a break of structure. So this is the last bullish candlestick. So therefore, I'm marking it out as our order block. This is our order block here, guys. This is our order block here. And again, this is our break of structure. Remember the three factors that you need to see in a order block formation for it to be valid. First of all, a break of structure, imbalance, and make sure the order block hasn't been mitigated yet. So now this is our order block, this is our break of structure, price break structures to the downside, and this is our fair value gap. You can see these are fair value gap, making this order block a very strong one. So therefore, you can take your buys, your sell order from this order block. As easy as that. If you want me to do a video on a strategy which you can use to trade order block, go down to the comment section below and comment it there. Then I'll do a video on that. See you guys in the next video.